Hi, every investor wants to own multi-baggers. You know, the kind of stocks you ride for years, which then go up multiple times. But are you up to the occasional torture of riding them? Yes, torture, because riding a multi-bagger stock is often like riding a finicky racehorse which tries to throw you off. You don't believe me? Look at any stock that went up multiple times during the last 25 years. Oh, let's say Intuit, INTU symbol. It's up from $8 to 510 in the last 25 years, or 64 times, which is 18% per annum, plus a dividend of about 1%. How did the market do during that quarter century? Well, during that same period, the S&P 500 went up only 6 times, or 8% per year, plus a dividend of about 2%. 18% versus 8. Nice? Sure is. However, during these same 25 years, Intuit stock often did its damnedest to shake you off. How long were these periods? How about 6 years? Like between 2000 and 2006. What's worse, during the first of those 6 years, from 2000 to 2001, Intuit stock plunged 75%, from 40 to 10. Yikes! Could you have stuck with Intuit then, down 75%, then wait 5 more years for the stock to get back to even? Would you have? Really? Would you have gone through that 6 year torture to get the 18% per year return? The answer is it depends. Depends on what? On who you are, where you sit, and what you are. Which brings me to the topic of this clip. Multi-baggers are not for sissies. Most investors are sissied by default because they are agents, that is, by design. The only ones who can afford not to be sissies are principals. Which type are you? If you are an employee of a money management company that is an agent for other people's money, OPM, most likely you could not stay with a multi-bagger for three simple reasons. First, you are not the sole decision maker. The investing committee is. Second, if you did hold on to it, after 2 or 3 years of stiffing your portfolio returns, the client who does own the money and give it to you to run would fire you. What's the third reason OPMs cannot hold on to multi-baggers? It is called rebalancing. Say you run other people's money and have a portfolio of 19 stocks. Each has 5% of the portfolio, except for one, a super duper multi-bagger that has 10% of it. A year has passed. The 19 stock rose about 1% each, but the multi-bagger rose 50%. So it is now about 14% of the portfolio. Do you keep it at 14%? Or maybe you add? No. The rules of the OPM business say you can't have too much of anything because it's too risky. Too risky means too volatile. So you will be forced to sell some of the winners, also known rebalancing, and add to the laggards. Sounds stupid? It sure is, but them are the rules. So you may ask, who can hold to multi-baggers? The answer is principals, not agents. These are mostly individual investors like you, yes, or money managers who run a corporation like Buffett, whom they control, who can own something forever because the clients cannot ask for the money back, even in the market plunge. They can only sell the corporation share in the market to other people. Now, why am I telling you all this? Because the great conclusion for you is that as an individual investor, you have a big edge over OPM runners. You can hold on to your multi-baggers while OPM runners probably cannot. And why am I saying all this today? Because the market just threw a conniption and plunged 10% fast. And a few stocks, even good multi-baggers, fell more than that. As a result, many OPM runners are selling. Why are they selling? Because of fear. No, not fear of losing money. Remember, the money is not theirs. It's other people's money. The fear of the sellers is of losing their jobs. And this fear is now palpable. You can practically taste it, smell it. You don't believe me? Here are a few choice quotes. BlackRock is the ultimate OPM runner. They run a few trillions. That's trillion with a T. The chief, Larry Fink, just said, I see more global fear than any time in my career. Or MarketWatch, which many OPM runners read over breakfast. Its recent headline was, Extreme Fear Return to the US stock market. This fear is also visible in the numbers. The Fear and Greed Index is now 24, extreme fear, and the put-to-call ratio is 1.3, highest for the year, as the panicky crowd buys more and more puts to defend against further plunge. In fact, the bearish sentiment is now as high as at March 2020, when, of course, the market just bottomed after COVID. In sum, panic is sweeping the market and many OPM runners are forced to sell because they fear lagging the market and thus losing their jobs. In the past, this sort of fear is what caused bottom. Does it indicate the same today? It probably does, especially when, all the while, US Secretary Treasury Janet Yellen keeps printing T-bonds and selling them, thus creating cash to the tune of $300 or $400 billion a month. That, of course, alongside the massive fear, is rocket fuel for the market. Now, what about you? What are you doing? Buying or selling? If you're an employee of an OPM company, that is an agent, you too probably are forced to sell, although reluctantly. You have to keep your job. However, if you run your own money and can take the temporary discomfort, you can hold and even add to positions, if you have the cojones to do so, that is. Which bring me to the key conclusion. To hold on to multi-baggers for years, you first need to establish the fact that they are indeed such, that they are worth holding. And this you can only do through sleuthing, on top of standard numerical financial analysis. How to do so? Read my books, The Sleuth Investor and The Advanced Sleuth Investor, and see how to do this. But you also need two more qualities. You need decision-making authority and you need cojones, that is courage. The first you have if you run your own money, but the second, courage, has to be developed over years of experience when you finally realize that panics are often temporary and are therefore often the best times to buy. What about today? I'll stick my neck out and say that with a wave of fear now washing over the market and the massive printing of French T-bonds that wash the market with cash, my long experience says it's highly likely the market will be higher, very likely higher, 3 to 6 months from now. So hold on to your multi-baggers, don't be a sissy, don't sell. Thank me later. That's all for today. Please let me know what you think of the above, and if you like it, retweet to all your friends subscribers so they subscribe too. Then buy my books, The Sleuth Investor and The Advanced Sleuth Investor, where you can learn how to sleuth so as to take the money of those who haven't read the books. As for developing courage, there you'll have to learn from your own experience, like I did. Or if you read my books, you can learn from mine. I'll see you next time. In the meantime, thank you very much for watching.